Okay. All right. Well, thanks for meeting us this afternoon. I have Tricia Carter with us today, and I have Troy Miller, and they are with Haber Wealth Advisors. And we really just want to take a minute and kind of talk about what they do and how we're working together, and just help people understand the difference between a CPA and a wealth advisor. Some of you may think, well, I already know, but I think you don't. We've got some great questions here. We're going to ask them today, and thanks for joining us. So Tricia, I'm going to start with you first. Could you tell our audience a little bit about you and your background?
Sure. Well, thank you for having us. We appreciate it, and Ingrid and her team do such a great job, so we appreciate being associated with them. So I'm Tricia Carter-Wood. I'm celebrating over 25 years in our industry, and I am a wealth advisor and founder of Haber Wealth Management. So I started as merely practically a teenager as a part-time teller, and worked my way into being an advisor role, and then worked my way into founding my own company. And really what we do is we specialize in getting you to and through retirement. And we make sure that all the regular pitfalls that some of your peers might experience, or maybe they're not getting there as fast as you are because we're giving the right advice just for your family, that you can really, see that success and see those goals set out and us achieve them through your lifetimes when it comes to finances.
That's great. Thank you so much. And how about you, Troy?
Well, I'm also a wealth advisor at Haber Wealth Management, and there's differences. A lot of times people think a CPA does what we do, and that's not necessarily correct. So they're usually focused on accounting, taxes, things of that nature, and we work in conjunction a lot of times with them. But we're really focused on, as Tricia said, getting you through or to and through retirement. And so our main focus is going to be on that investment planning, or that financial planning, and your personal finances.
Great. Thank you so much. So, you kind of actually answered my first question. I've got a list of questions for them today, just to make sure that we go through the important parts. Can you just break down the differences for us, Tricia, between actually a CPA and a wealth advisor? Are they one and the same? Is there a big difference? Is it important for people to know?
It is. And in fact, I think it's one of the most common questions that we actually get from our clients. So, some of the best rates of return we can ever get is to help someone work with their CPA and reduce their tax liability. Because if you're in the 22% tax bracket and we're able to make a maneuver and you save that's a 22% rate of return on the dollars you did not send in with your federal taxes. But the roles themselves are very different. So a CPA is going to, constantly be in all the training and all the CEs they have to do every year on the current tax legislation. And those are constantly changing every year. And it's going to really deal with just taxes. Whereas what we deal with is more the holistic planning, as well as stocks, bonds, mutual funds, insurance products, to make sure that you always outlive your money. Along the way, it's important to partnership with them so that we have more money left for your lifetime. But in the end, we really do play two different roles.
Great. Well, thank you. Is there any type of special education that you need to have to do what you do, Troy?
Well, that's a great question. One thing that I really like about being a wealth advisor is that you're never fully educated on everything. There's always something evolving, and there's always more to learn, which is great, because it keeps it from getting boring, But I would say most people that come into this career nowadays usually have a accounting or in a financial background. Like I had my degree from the University of North Texas in finance. But I was first setting out to look at the CPA role, or actually forensic accounting is what I was looking to get into, and work with the FBI and looking for fraud and things like that nature.
Wow.
But I really loved investments, and a lot of those finance professors would help bring that out in you, show you those arbitrages, ways to make money, and so that's where I got excited about that. But to answer your question, most folks get their college degree, and then they usually get in with a large firm, and nowadays a lot of the banks are affiliated with a lot of the investment houses. So you might think of a Merrill Lynch or Bank of America, et cetera. And a lot of times they have training programs they can get into, and they'll help you understand that. And then there are quite a bit of licensing that you have to go through, law exams, basically state and federal law exams that you have to pass before you can actually sit down and start to do the business.
You know, I know one of the things for myself as a real estate agent, and I'm just finishing doing some of that now, every couple of years I have so many hours of legal updates, contracts, etc. Do you have anything like that in your business?
Yeah, we do. Our continuing education, I think
Yes.
is what I hear a lot of people say it. But yes, every couple of years we have to go and sit down and, what is it, 20, 30, 40 hours? It's quite a bit. And it's not just at your own pace at your house. I mean, a lot of times it's at what they call a testing center where somebody's kind of making sure.
We do too.
That's your own point and going through the process. But it definitely, helps keep the industry and the folks that do that, the advisors on their toes, right?
Well, I think that's really important because it keeps us current in our
Right.
businesses. It's real easy to be busy and to continue on every day and doing your thing, but there could be other things going on around you that you're not aware of that have been current updates. So it's important for us
Right.
to be able to stay on top of those things. So, Tricia, how does someone start working with someone that is a wealth advisor like yourself?
So, there's all different avenues, and I always say there's many of us in the same sandbox as well for different qualifications, and we all play our important roles. So, after over 25 years, I am by referral only, and then even, making sure we qualify. That is really important so that I don't take time away from my existing clients that I've promised. And however, then we have Troy that comes in who has, close to a decade of experience, and we're not looking for the same type of two clients. He's an entire decade younger. So it's great that we have someone that's able to help a younger family, whereas most of my clients are over 60. We also have a new advisor coming on, and he'll be 23. And he will, really hone in on the 20s and 30s, whereas Troy really hones in on the, late 30s, 40s, and 50s. And so I think having those stair steps where you have an entire team and all the years of experience combined, because we all help each other with each other's clients, but having opportunities for different people at different levels of assets to be able to engage in an advisor is really important at Haber Wealth, because we want to make sure we know how to do this and do this right. We want to make sure that we're able to share that with multiple generations.
Oh, that's great. That really is great. Troy, I have a question for you. So how do you establish if you're a good fit for a client, and what happens if you're not? What do you do there? I know for me in my business, if we're not a good fit and it's a sincere client that has a need, I might refer them on to someone else. How do you handle that in your business?
Right. So we do come across that, and we do have other advisors that we may partner up with, or maybe a discount broker like the ones you see on TV all the time might be a good fit for them, or a good place for them to start. But how we establish that is really just sitting down and having a conversation like we're doing today. Just, trying to understand their goals, their dreams, their ambitions for their family or for themselves, their business, and, see if those are things that align with a lot of the values that we have at Haber. So if there's a good fit there, then we'll definitely find a way to present a plan and hopefully include those goals and everything that they're looking for and work together with them. But sometimes they're not. Sometimes maybe they're into day trading, or they're into doing their own options trading or something of that nature that we're just not, that's not what we're looking to do. And then we can certainly refer them elsewhere. But we definitely treat everybody with respect, integrity, all that good stuff. And if there's somebody that isn't a good fit for us, we'll let them know up front. It's always better that way than 2, 3, 4 years down the road.
Well, that's true. And I think that's got to be, in some cases, that's got to be a hard conversation. Because as you mentioned earlier, your business comes to you by referral. So if somebody's coming to you because they've been told this is the place you need to go, but now you're saying, not us, that's got to be tough.
I think it's how that you approach that family with respect. So I will tell you, in we call them introductory meetings, because they're not even prospect meetings. We're very blessed where we don't have to grow if we don't think it's a good fit. And so in those introductory meetings, Ingrid, we tell them up front, in today's meeting, there's nothing for you to sign. This is you getting to know us getting to know you. After the meeting, we'll give you a call in a couple of days. We really want you to think about it. If we don't think it's a good fit or you don't think it's a good fit, you've just met a friend and at least gotten a second opinion on your financial life.
Oh, that's great. Great idea.
And then so we let all of our clients know that it might or might not work out, and that's okay. We'd rather the client be happy because it's their money, not the person who referred them's money and not our money.
Good point. Good point. So, Tricia, I'll ask you another question. Can a financial advisor help someone determine how much they can afford on a large purchase like a home, their business, or investment? And do you look at what risk factors are involved and lay those out for them?
Absolutely. In fact, you will hear in our office often, Troy and I tell clients, we're here to tell you what you need to hear, not what you want to hear. Mm-hmm. And so to, always keep us in kind of that perspective as a professional is that your success is our success. So, whether it's a home, it is, we recently worked with a client that wanted to retire, and in her dream world, it was retire with a Porsche. And we started going down the list of all the maintenance that it would cost. And she realized she would have to downsize her house to have the car.
Wow.
Well, her house seemed to be more important than the car, right? Mm-hmm. So with over those 30 years of experience that we have, we've gone through those case scenarios. Also, there's just terrific software out there. And, we're power users with the product eMoney, which is the most extensive software in retirement planning and decision making when it comes to our industry. So we're able to model different ideas. One time I had one of my clients, she purchased a used Lexus. It's around $32,000. She was very proud of it, drove up, came to her meeting, and we were talking about, and I just said, I just want to show you an example of why it's important that you would call our team before making that purchase. So we were able to model in, we took $32,000 out, and over her lifetime, was that car worth $81,000?
Oh, wow.
Because that's what it really cost her. And she definitely agreed it was not, went out to her credit union, financed it, put the money back, and she was, just so grateful that she had somebody else besides just herself as a single woman to make those decisions.
That's great. That's great. I really like that. So, Troy, in your opinion, what are the most important factors to consider when crafting a retirement plan for someone? Is there ever a bad time to start? For a lot of us that are self-employed, we're working, never knowing when can we set that aside?
Right. Well, I think the whole industry, along with myself, would tell you the sooner the better, right? So, it's incredible if you look at these, whether it's eMoney or a lot of the different tools that we have. I mean, just the Texas Instruments, time value money calculator will show you, if you start earlier and put that money away, how well that's going to set you up later in retirement versus having to, unfortunately, most families with young kids and things of that nature aren't really getting to save that money until later in their career, where maybe they're starting to make the money that they can afford to do a lot of things that they want to do. So like Tricia said, a lot of times we're having to have those tough conversations and tell people what they need to hear, not just what they want to hear. But yeah, as far as timing, obviously sooner the better, but we definitely sit down with them and go through. I would say retirement planning of, 10, 20 years ago, people would say, hey, what's your time horizon? What's your risk profile? And they kind of craft together a report. Well, now through technology, we're able to do so much more and really show them. And Tricia's really good at explaining a lot of the pictures that some of this technology can show you. Mm-hmm. And so now there's a lot more variables that really go into that. Like, if I buy a car every 5 years and I pay cash, how's that going to affect my retirement, especially when you can get, car loans at under 5%, right?
Right.
Mortgages, right? I'm going to pay off my mortgage 20 years early. Is that really a great idea? I mean, I know everybody wants to be debt free, and that's certainly a great thing, but we can help them see the big picture.
Mm-hmm. So you both have mentioned about a software program that you have that really helps you to make these determinations. You know, there's so many things that are out there right now. I mean, as a real estate agent, there's a program I can download to tell my buyer or my seller how much they're going to pay closing when they come to closing. Is this type of program something that people like myself can go out and download, or is it specific to your business?
You know, I will tell you there's a big difference in what you can go in to download and what we provide. The big difference is if you go through some of the apps which are well advertised and have great ratings on the App Store, if you're not going to spend the time to read the user agreement, don't download it. Most of those apps, which you might pay under $10 for a year, or it might even be free, are then taking your everyday purchases, your banking transactions, and they're selling it to other vendors. And all of a sudden on the black web, there's a lot more information about there that you might not even have calculated yourself.
Right.
So the advantage of us choosing to make technology, besides payroll, is our largest budget item a year, is because we want to own it, and we want to make sure that our clients' information is never shared with any other third party. And so I do think, and that's the difference in the Haber Wealth Management, right, shop versus a wirehouse. There's lots of great things coming from a background of a wirehouse. There's lots of great things they would like to implement, but when you have to implement costly software across 10,000 advisors, and you know maybe only 20% of them will even use it, those advisors as a whole get exempt out of great things that we're providing. When you have a firm and you get to decide where that generating of that income goes, and you choose to make sure that your whole team is constantly being updated and educated, but that we also own the software, you can do that and still have the backbone of advisor group, FSC, and Pershing in the background. But we get to make those decisions ourselves versus corporate saying, sorry, we're going to pass on that because we can't afford to have it globally.
So when you talk about a wirehouse, are we talking about different types of firms that do similar things to you? What are Edward Jones comes to my mind. Would that be a wirehouse?
So that is, there are several different wirehouses. Most of your banks that you bank at probably have an arm that includes a financial advisor. Those are also considered wirehouses. So the difference is that they're W-2 employees, so they're being told what to do. We're 1099 employees, and we're held to a much higher standard. We've elected to 10% of our revenue every year, which is a six-figure number that goes to having a third-party compliance that is in all of our emails, all of our text messages, right? In every account opening we're having to justify. I think that is our fiduciary responsibility back to our client. So we all have the same capabilities. We all have the same license. It's having control of making those decisions on behalf of your clients, or having a corporate entity make the decisions on behalf of your clients. So in my opinion, and for most of my peer groups and my friends that are in the industry, it's everyone's dream to go independent because no one knows your clients better than you.
That's exactly right. Yeah, absolutely. How often do you review a client's account with them? Is that up to them, or is it up to you? Do you set them on a schedule? Troy, tell us about that.
Well, it's a great question. We have a lot of processes at Haber Wealth Management, which is great, right? Keeps things from falling through the cracks. And so I would, a lot of times when we're starting out with a client, there's going to be a lot more interaction, right? A lot, make sure they're getting on the same page. And so a lot of times we're usually having at least 2 times a year, we have a really solid, thorough review of the accounts, with the investments, how they're doing. How's the person how's their life events going on, their situations at home. But as they get closer to retirement, I'd usually say around 2 years before they're thinking of retiring, we're meeting a lot, every quarter, right? So there's a good 8 solid meetings there that we have leading up to their retirement. And but to answer the question, it kind of depends on a few things. Obviously, how much financial planning, how in depth are we getting into the weeds for this client. Some may just have an IRA account and they simply have that with us, but we are willing to take it further and look at their 401k balances and what they need to be saving there, how's their budget at the house, and it really just depends. I really hate to say that this client's only paying us this, so they're only going to get this. I mean, at the end of the day, we want to make our clients happy.
Right, right. Is it, if someone is thinking about making a change, is it easy to move their monies and their investments from one to another?
We are very fortunate about that in our industry, in that we're all over the government body of the SEC, Securities Exchange Commission, along with FINRA. And so anytime that you decide to move firms or even move advisors, you simply sign documents of account opening, which includes in the background account transfers, and it actually is all handled with our back office and the losing firm's back office through our government bodies.
Oh, okay.
Which is great, and that helps protect in case that there was, some bad feelings on the other side. That helps protect to everyone to know that their account cannot be bought, sold, or exchanged. It has to all come over in kind, usually.
Oh, that's good to know.
So good protection for the client.
It is. My question that goes along with that is, how do you earn your fees? Do you mind sharing that with us?
Sure, absolutely. I always encourage that question, especially because, a good part of my book of business is women. And I think sometimes we come to the table and we're a little intimidated to ask, how do you make your money? Mm-hmm. And so in our very first introductory meeting, there's always a customized agenda with a few facts that we know about the family we're sitting with or about the lady we're sitting with. And one of the questions that we put to ask us is, how do we get paid? So I'm glad you asked that, Ingrid. So, we're all allowed to pretty much get paid the same way. You get to choose what that is. Mm-hmm. And so we're of the belief that we always want to be on the same side of the table as our client. Therefore, we're fee-based predominantly, which just means if your account is being charged 1% for the year, the last day of every quarter, a picture is taken of the account balance, and 0.25% of that is taken out of the account for the fee, which is really important to know, because that means if your account balance is down, Haber Wealth's fee is less. So you better believe we're always looking to protect that downside, because we're on the same side of the table as the client. And even if, like in 2020 and the coronavirus and the market went down very fast and recovered very quickly, even though an account balance recovered very quickly, we didn't get to go revert back that fee. Mm-hmm. So it was very important to us to protect as much of that downside, and we were very successful at that. So we enjoy being able to do it that way.
That's great. That's great. I know that you have your office in Fort Worth, mm-hmm. Mm-hmm. And then are there other offices for your group?
We are. In fact, we have a great 10-year plan of growth at Haber Wealth. We have, as Troy mentioned, the processes in place. We have a fantastic staff and team members in place, and we're looking to grow. So our second office that we're going to open next summer is in Cameron, Texas. So that's my hometown. And our new advisor we just hired, he will be heading that up, Carter Haber. So you might recognize the last name.
Yes. Uh-huh.
So we're very excited about having the next generation of Habers into our practice. And then we've got other future growth. Even in the office in Fort Worth, we're looking, here to add on one new advisor at a time, let Troy and I work with them over a couple of years, really train them how to do business the right way and treat our clients the right way, and then continue that growth.
How many advisors do you have right now?
We have Troy and I, and then we have an admin team of 4, and then we have an advisor in training. And then in the background, through Advisor Group and FSC, we have a network of over 10,000 advisors that we also work with, train with, bring ideas across the table with. So it's a large network, but Haber Wealth itself, we're up to 6 employees.
Wow, that's great. And you have a beautiful, beautiful office.
Thank you.
We
wanted it to be home, not that someone was coming in for an annual physical.
Right. And it does feel that way. It's just really stunning. Really, really enjoyed the opportunity to come there. So we've given our audience a lot of information about wealth management and how the two of you have built your businesses. Is there anything else that maybe I didn't have in my list of questions today that you felt like we want to make sure and relay this message to the audience?
Well, I'll go back to your last question when you asked about a physical office space. And I will tell you one thing that we learned through COVID is that, and we have clients all over the United States anyway, but to follow up, one thing we really learned is that we can, and go virtual and really help people wherever they are. And so I just don't want location to be a limit for folks. And so Zoom has definitely been incredible for our business. It's something that I know Tricia used a ton during COVID and myself as well. So I just want to make sure that the audience knows that we're willing to work with them.
All right, they don't have to come to you. You can go to them.
Exactly, and we're able to share our screen with them, right? Which is, but there are some great things. There are some good perks that we do at the office that they definitely would miss. But like everybody loves our cookies.
Yes.
And so, and like Tricia said, we want to make them feel at home and at ease to relax. I mean, at the end of the day, we want to help them get to where they want to go.
That's great.
I think in closing, a couple of items is that if you guys go to haberwealthgroup.com, on the bottom of every page to the right is a blue button that says broker check. It is very important. Many times your money becomes even more important than the kids you raised because you don't want to depend on those kids financially.
Right.
You always want to be financially independent. And so making sure that you partner with someone that has the same ethics that you're looking for. So that broker check goes across the nation, and it is backed by FINRA. And so that you can check any advisor's past discretionaries, or if they have none like myself and Troy, you know where they stand. So I think that's important. Also, I think when you sit down with someone, this is a true partnership. And, since we are fee-based, really, where we get to partner with the client, they really become profitable to us after a long period of time. There's so much the first couple of years to get under our belt and get to know each other and get the goals and investments lined up together that we want that partnership for a long time. You should sit down at the table and you should really think this is not a transaction, that this is a long-term partnership that you're going to have and that you're really able to feel that way. And third thing I would tell you is, and you had mentioned some other firms, most of those offices have just solo advisors. There's just one person.
Right.
And the one thing that Troy and I, sit down a couple times a year, also that, group of over 10,000 advisors I told you about that we all get to partner with across the nation as well, we are constantly talking about that survivorship. What happens if I get hit by a car on the way home and I don't survive? In my opinion, I think it's thinking of the client is to be part of a group so that they know Tricia doesn't have to be here, or if Troy's not here, God forbid either one of us pass, nothing changes for that client. They've lost a friend, but they have not lost their way in outliving their money.
That's great.
That plan's still in place. So I
That's
do think
really
it's
great.
important you look for teams and not just solo advisors. I think that time has passed.
I think that's a great idea. The other part of that comes to mind for me, because we work a lot in our business with individuals that are 55 and older, and oftentimes we have conversations about their trusts, about their wills, their power of attorneys. And I think it's important for people to realize that you work very closely with their attorneys as well. And in some cases, there's overlap with what you do. Would you agree?
And in every case, there's overlap. I would really say that. Even if a couple needs a simple will, or they need a very complicated trust or tax planning documents, that in every case. In fact, so much so that all of our families have customized agendas. And at the bottom of their customized agenda, we address long-term care, because as you know, that is very expensive now and it's going to continue to rise in cost. We also have who their CPA is, so that we know when that CPA calls in, or if we need to make a call out, who that partner is. And then the last line on that agenda is when their will was updated last, who the attorney was, and if we have the power of attorneys on file. Because all of those things can not just affect your financial life, they can affect all of your life.
Right.
And in the end, the finances can be affected by bad decisions in other areas. So we want to make sure that we've covered all that. We also personally read every single client's will. We make notes on it. It's saved that way so we can go right back to those notes. So unfortunately this year, right, we've lost 2 clients due to bad health. Both of them were cancer. And their families knew, one call came in at 9:47 on a Friday night. Their families knew to call us first before they started making funeral arrangements. Both of those families went to the funeral home, Ingrid, and they knew the exact number of death certificates they needed.
Wow, that's great.
They also have been coming into the office on a weekly basis, and we're helping them make sure that we go through all the documents, not just Haber Wealth's, the VA documents, right? The life insurance documents they had well before us, their Lockheed Martin benefit documents. So that language is very common to us. But if you're a new widow, you might not have ever seen that language before. So we want to make sure we get through all those transitions very smoothly.
That's really important, and I think that's that part of it, like you had mentioned earlier, in your business where you have a lot of women that are clients as well.
Yes.
They have a tendency to be paralyzed when something like that happens, and needing to know, where do I start, and knowing that they have someone like yourself or like yourself, Troy, that can walk them through that and help them feel like they have someone guiding them is important.
It is. And it's doing the right thing. And at the end of the day, if you're not in the business to do the right thing and treat your client like it's a family member, probably should find another business to get
Exactly. That's one of the things that we pride ourselves with. One thing that's been really great for us as senior downsizing experts is that we have a seminar series that's called Smart Senior Series, and we have the privilege this year of having this group, Haber Wealth Management, a sponsor for us with our seminar series. So we have several left. I think we have 6 left this year. One of them will be present at the ones that we have coming up. So if you watch this video and you have some questions, please feel free to show up at one of our seminars, and you will be able to see Troy or Tricia, or maybe even someone else from their firm. But thank you for coming today. I really appreciate that.
Thank you. It's our pleasure. We appreciate you and what you do in our community.
Thank you.
Yeah,
Thank
the seminar series has been great, and it's really been educational, and I can see the light bulbs going off on all
Yes.
these folks. So we appreciate what you guys are doing.
Thank you so much.